Ladies and gentlemen, I'm very happy to be here today to represent the Luxembourg Stock Exchange and the Luxembourg Green Exchange for the first time in maritime money in Luxembourg. As a brief introduction of the exchange, the Luxembourg Stock Exchange is the listing venue for international debt securities with nearly 40,000 securities listed from more than 2,000 issuers in 100 countries. We are the natural gateway for international capital markets. Since 7 years, since 2016, we are also the home of Luxembourg's Green Exchange, or LGX as we like to call it, which is the first platform in the world entirely dedicated to sustainable securities. And a meeting place between, on one side, issuers of sustainable securities, and on the other side, ESG-conscious investors. I think you can hear me a bit better right now. Thank you so much. So we are very proud of our numbers, and we are very proud to see that the platform has been growing enormously since launch 7 years ago, and presently hosts some 1,500 bonds from 250 issuers in 50 countries, on top of around 1,400 funds with a clear and intentional ESG nature. Because of our international footprint, 70 plus years of experience in international capital markets and unrivaled expertise when it comes to sustainable finance, a number of shipping companies such as Maersk Moller, Hapag-Lloyd and Lancer Containers Line have already entrusted us for the listing of their debt products in Luxembourg. And we are actually the stock exchange for reference when it comes to sustainable securities from the shipping industry. We are also the partner of choice for prominent Greek issuers such as National Bank of Greece, Piraeus Bank, Hellenic Bank, Alpha Bank and Eurobank, many of which are actually present today. Now, you may ask yourself, what role can the Luxembourg Stock Exchange and the Luxembourg Green Exchange play in the shipping industry? Well, this industry, your industry, is now and more than ever in need of strong financing for new major investments and potentially to diversify from traditional banking lending finance. We heard it already, decarbonization is no longer a choice, it is a reality, it is a necessity. And we also know that offsetting carbon emission is not going to be enough. So we need substantial investment to decarbonize the industry and keep it relevant and future-proof it in the long term. And when we speak about investment, capital markets play a very effective role in accessing international investors on a regular and long-term basis. And when we talk about debt capital markets in particular, which is our core business, an issuer has actually the choice between adopting general funding instruments such as plain vanilla bonds and not being tied to any specific use of proceeds nor to any specific reporting. Or on the other side, the second choice would be to draw from the very fast-growing catalog of sustainable finance instruments that have been emerging in recent years and which interlink an issuer's strategy, especially decarbonization strategy, to its funding plans. Of course, choosing one family of products or funding products or the others is clearly an issuer's very personal and subjective choice. But why would an issuer in the shipping sector raise money via green, sustainability or sustainability-linked bonds, knowing that the same project can be financed by plain vanilla bonds, which comes to, I would say, much lower reporting costs overall? Well, using such instrument is a great opportunity to signal to investors that your company is committed to sustainable investment, whether that is at the level of strategic plans or at the level of the CapEx spending. Clearly, this can't be an isolated choice. Actually, tapping the market under one or the other format I just mentioned needs to be part of a consistent and long-term oriented decarbonization strategy of the issuer. But there's more to that. there is another advantage, and the level of transparency that is intrinsically embedded in such debt instruments is very good in enhancing an issuer's investors' relations approach, its credibility. We know that trust is fundamental to keep and to grow investor space, and we know that transparency is the means by which investment decisions are filtered. And with ESG screens from ESG-conscious investors increasing, using the green sustainability or sustainability-linked bond format clearly put an issuers on the radar of such ESG mandates from investors. So you might ask yourself, what are this instrument more in details and how they're being used? So the first family of instruments, user proceeds instrument, among which you can see green bond and sustainability bonds, are user proceeds instruments in the sense that the issuer is obliged to use 100% of the funds, of the proceeds being raised by the bond for eligible projects, meaning projects that are aligned to a specific taxonomy. And they're also obliged to report accurately and transparency on such allocations. So typically in this industry, the shipping industry, this kind of products go to finance hydrogen or methanol-fueled engine constructions and infrastructure, such as connections to green logistics centers and even greener logistics. Now, while this instrument works optimally in promoting a very straightforward, transparent approach to the green, or sometimes with natural gas, liquid gas transition nature of the assets, they might not be fit for all issuers. In fact, enough critical mass of eligible projects that can fit the right taxonomies, is requested to justify the issuance of a use of proceeds bond. So a valid alternative is the general corporate purpose bonds in the form of sustainability-linked bonds. And it's actually this second alternative increasingly being used in the industry since Hortfeld started the market around 1.5 years ago. So using such a funding option would leave the issuer free to use the proceeds for any general corporate purpose and be flexible then in relation to which CapEx spendings might take them there. However, the issuer would need to publicly commit to some sustainability targets, typically GHG emission reduction targets or energy efficient improvement, for instance, the number of vessels powered with alternative fuels, and to entrust such commitment in this bond structuring. So not reaching such targets, which need to be material and ambitious enough for the issuer's own business model and against sector or even absolute benchmarks, would generally trigger some financial compensation to investors, typically in the form of coupon step-ups. So issuers and investors, both sides of the equation, have clearly started to align objectives when it comes to capitalization and even to price the impact of some metrics. Clearly, we heard it pretty extensively today, and I think we will hear it even more going forward with the rest of the panels. There is still uncertainty of what will be the winning technology or the winning fuel. So what we're seeing as a result is that most of the project being financed via this product is about retrofitting. Only a few players are actually going into buying and constructing new vessels with new technology. But whatever the tactic, whatever the rationale of such tactics, it cannot be emphasized enough that the maritime industry cannot delay action, and that means investments any longer. And bringing it to our platform, to the Green Stock Exchange in Luxembourg, it is via this platform that we give visibility to eligible issuers and products that make sure that companies' commitments are well known to investors and supported by an appropriate level of upfront transparency about where the money is going and about the impact that such money is generating. This starts from the very moment the issuance is admitted on the Green Exchange and continues through the life cycle of the security by means of a regular reporting on, again, user proceeds or target reaching. Such disclosure guarantees can only strengthen an issuer's reputation and appeal to investors, generally speaking, and ESG investors in particular, of course. More recently, and as a reaction to market demand, we have launched assistance services that are a complement of our expertise. We have a dedicated team of 8 to 10 people. Optimize their disclosures against markets' best practices to investors. So EDGIX is a convener, a meeting point when it comes to ESG investment opportunity. As an exchange covering a vast variety of instruments, and you will see them on the slide. We also host some 4,000 funds, an increasing number of which are of ESG nature, so-called Article 8 or Article 9 funds, if any of you is familiar with the EU SFRD regulation. So by doing that, by having both the buy side and the sell side displayed on the platform, we are clearly helping to shorten the distance between issuers and investors. And I'm very aware I'm one of your last obstacles before lunch. So I would just like to close by saying that Luxembourg is not only a strongly integrated financial center, we are also home of a cluster, maritime cluster, hosting more than 50 member companies specialized in maritime transportation, dredging, logistics, finance, law, and insurance, of course, to name just a few of the country's integrated and accessible expertise. This year, the cluster has taken the presidency of the European Network of Maritime Clusters to enhance cooperation and knowledge sharing across a number of EU jurisdictions. So my main and final message today is that Luxembourg is the place to go to for the industry to navigate it through financial and operational growth into the new reality. I will be available with my colleague from the Luxembourg Stock Exchange and also from the Luxembourg Government Maritime Office to discuss with you in the next breaks. Thank you very much for your attention.